So again, thank you so much for coming. Here we go. A little bit about Josh coming into this thing. So, number one, I want to start out by telling you just a little bit about the person that's presenting. It's important to me. I think people get up on stage and they try to act bigger than the audience that they're talking to and try to make themselves look like they're this grandiose person who's all knowledgeable. I'm here to tell you that is not the case for the presenter here, okay? I'm a simple guy, I work really hard. I'm actually from a tiny little town called Lake Stevens, Washington, up north. When I graduated high school, there's 3,000 people. Who here's from a small town? Bo's from a small town. Sam's from a small town. Crystal, small town. Here's the funny thing about small town people. The conversation always goes the same way. It's always this competition about whose town is smaller. And usually goes something like, we had bring your tractor to school day, or something about 4-H, or how you ride a horse to school, or maybe your town only had one stop sign, or maybe on average, each one of the patrons had like 12 teeth, right? That's usually how the conversation goes. Okay, so I'm from a little small town. We were all of those things, which is awesome. But again, I'm proud of my small town. I love that place. But I live down here now, and I'm not going back. So next thing, I'm actually from a super highly educated family. Dad, grandparents, sisters, brothers, they're geniuses. It's a nightmare, okay? I'm telling you right now, that is not me. I hated school, I was not good at school, and it made it worse because all my siblings were just so phenomenal at school. So if you can imagine every day you're coming home, they got straight A's and you don't, maybe even straight C's. It's a fun conversation. In fact, my report card came home one day, I think he was like a junior in high school, and my dad opened up and looked at me, he's like, son, there's two kinds of people. People that work smarter and people that work harder. Because you're going to have to work really, really hard. Like, thanks, Dad. That was my dad. There we go. So I tell you all this. Maybe you relate to my story. Maybe you're looking at me going, wow, what does this guy have to teach me? And why did I show up here, right? But I can tell you this. What I didn't learn in school, I definitely have a master's degree from the School of Hard Knocks, right? School of Life. I managed to learn everything the hard way. And the beautiful thing about learning the hard way is it really sticks, right? So I'm here to tell you guys that throughout my 25 years of being in this business, which is wild to say, there's a lot of things I've learned, a lot of lessons I've learned, and hopefully I can impart some of that wisdom on you guys so you don't have to learn things the hard way like I did, okay? Now, I'll tell you this, that there's two valuable lessons that I've learned in mortgage and in real estate, okay? First, and let me find my notes as I'm talking, otherwise I'll get lost. The first thing is that if you want to succeed, you want to rise to the top of your industry, you got to set yourself apart, right? You got to. You got to set yourself apart. You got to bring value. You got to be able to bring a difference to your client, right? That's number one. Number two, you have to embrace change, right? Because it's changing all the time. I think about 25 years since 2000, all the things that have happened, market collapse, COVID, low rates, high rates, and I keep hearing people say, I can't wait for just a normal market. And I don't think there's ever been a normal market. I'm not sure what a normal market even is. I just think that whatever that market is, it's the same thing. Showing up every single day, working your tail off, making your phone calls, doing your contacts, getting out there. We're all doing the exact same thing, right? So those, would you guys agree? Two most important things right there. Cool. Here we go. Because if you're not making a difference, if you're not showing up and being different than everybody else, what are you? You're just a commodity, right? And a commodity is just someone who's doing the exact same thing as the person next to them. And doesn't matter, if they went to agent A, agent B, loan officer A, loan officer B, you're going to get the exact same result, okay? So a great example of commodities. If you guys, who's old enough to remember these names? Pan Am and TWA? Absolutely. Anybody remember when they went out of business? No, you don't, right? Because airlines are commodities. If one of them went out of business, you wouldn't care. You'd just go get a plane ticket at another airline, right? Now, an example of something that's not a commodity would be Disneyland, okay? Disneyland goes out of business. Some people here would be heartbroken. I know there's some big Disneyland fans, right? So You want to be Disneyland. We don't want to be commodity. With that being said, you got to embrace change like we're talking about, being different. The only constant in real estate is that it's changing all the time, period. You guys have heard that a million times. It's an old adage, but it's so true. You have to change to meet the needs of people. You can't win without change. If you do the same thing all the time, you got to expect the same results, right? 100%. Here's a list of the top companies from 1955 and 2024. This was actually pretty fun. I went through the top 100, but it looked too small and you guys wouldn't be able to see it. General Motors was number one with $9,823,000 in revenue. Maybe that's off. And now Apple is up in the trillions in just 70 years, which is incredible to say. But you'll notice not one company from 1955 is up there in 2024. GE was actually the closest one in 2006. Fun fact, because I was doing the research. In 2006, they're like top 10. Since 2006, they dropped down all the way like 55 or 60. It's pretty incredible. So if you're not changing, you're dying. In addition to standing out and changing, there's 4 must-haves. I know you guys know this, but it's so, so important, okay? The 4 must-haves in real estate. Number 1, your attitude. Yeah. It's the attitude that you choose, right? Thank you. Hey, you guys want to give me an amen? Give me an amen. Let's go. 100%. Here we go. The attitude you choose, and I'm such a believer in this. Some people are like, these things happen to me. I don't get to choose my attitude. Every day you get to choose your attitude. Every day you wake up, you set that tone. It's so incredibly important. It is. Bad things happen to everybody. In fact, most of the time, people are happy when bad things happen to you, right? So the attitude you choose is unbelievably important. It's going to set your entire day. It's up to you to set the tempo of your attitude every morning. Everyone you encounter is going to see and feel your attitude. The best part is attitude is free, right? Everyone can have a great attitude when things are good. When things are bad, that's when it's challenging to have that great attitude, right? And I'm not going to stand up here and tell you guys that I've always got a great attitude. Just ask my team. When I hang up the phone with you guys and I'm all cheery and I'm yelling at them or slamming my fist on the countertop or whatever it is, like, it's hard having a good attitude all the time. I get it. Second thing, energy and focus. I'm such a believer in this as well. And a lot of people are going to say, you need to have passion. You got to have passion for real estate, you guys. You have to have passion for home loans, you guys. 100%, right? And that might be true a little bit, but passion fades, right? We can all agree? Passion fades. I'm tell you right now, I think I've done over 10,000 loan applications over the phone. It's a lot of phone calls. It's a lot of time, right? There's times where I'm just like, if I got to do another one of these things, applications, like I hate it. I hate doing applications sometimes. My passion is making sure my family's fed. My passion is making sure that I get to eat really good food. My passion is going out on vacation, right? That's what I love to do. I want to make sure my family's taken care of. My energy is focused to getting up every single day, having that great attitude, going out there and trying to represent not only my family, but my company, but also put our best foot forward every single time and give everybody your best effort. That's really hard to do. To give everybody your best effort is incredibly hard, right? You don't have to love every minute. We're not gonna. How many people love real estate every minute? Every minute? Oh, Taylor does. Taylor Clower loves real estate every minute, which is awesome, right? So the truth is, passion's going to burn out. Energy will keep you going, and remember, where your focus goes, your energy flows. It's so true, right? Keep your eye on what you got to be doing. So energy and what I say, energy and focus, thick skin, and a short memory. So huge. I'll be honest, and I've said this to so many of you. Being a loan officer behind the screen, you guys, like, it's hard, right? It stinks, and you're behind the screen. But watching what you guys have to do every single day when you are counselors, you're realtors, you're negotiators, you're having to drive all over the place late at night, you're getting crazy phone calls, and then having someone just dump you the next day because they found an agent at an open house or whatever happens. My heart goes out to you guys sometimes because you put in real time. You put in that like face-to-face time, right? We took a phone call and an application, like, they're not going to use you. You guys, like, you're emotionally connected. So having that thick skin and short memory. And if you dwell on the negative things and focus on the negative things, it will eat you alive emotionally and it'll burn you out. So having that thick skin and short memory is such a big deal. Next one, you have to have a solid team. And there's all kinds of monuments out there. All kinds of, I guess the monuments, what are they called when they're the tall things? Monuments, yeah. Never mind, sorry. There's all kinds of monuments out there of one person, but most of those one-person monuments had someone behind them, right? Tom Brady's the greatest quarterback of all time, but thank you, boom. Michael Jordan's the greatest basketball player of all time. Yes, thank you, all right. But they all had great teams and great coaches behind them, right? And same thing with myself, great teams behind me, great loan officers. Same thing with real estate agents. You have to have a great team. You have to have a great TC. Yeah. The great Rachel right here. TCs. TCs are the tricep. The tricep right there. The tricep, there's the powerhouse, right? They move it, 100%. Absolutely. You have to have a rock-solid home inspector and a pest inspector. And you have to have the lender, right? Cool. Now, as much as I want to have every single loan, right? Which I do, by the way. But as much as I want to, I know that we're not going to. And if I'm you, advising you guys as realtors, you really need to have a quiver of lenders, okay? And I'm selling other lenders right now, but it's the truth. If you're trying to be optimal and you're trying to do the best possible job you can for your clients, you have to have a bunch of lenders, okay? Not too many, because that gets overwhelming. You need a big box lender. And I hate to say that one because, you need your Chase banks, you need your U.S. Bank, you need Bank of America. You need a private wealth lender, okay? You get that jumbo deal, and they can do things that nobody else can do. It's just how it is, okay? Like I wish I could say we could touch what they can do, but you just can't. You need a credit union. I know we have Mission Fed and SDCCU. They do a phenomenal job. They got great stuff. They got those arms, and every now and then their pricing is unbelievable because they only change rates every so often, right? And then, of course, you need a mortgage broker, right? I did not put retail lender because I don't believe they're better than we are. So that's it. Just those three is all you need, okay? Your lender, most importantly, your lender needs to give your client a consistent process. And I'm not talking about just me, guys. I'm talking about whoever you choose to work with, right? They need to give them a consistent process every single time so that you know what to expect when you're for your client over there, right? Your lender needs to treat your clients like the gold that they really are, right? Okay, again, it's really, really difficult to be perfect every single time, but they really need to do it. 95% of the time, 98% of the time, it's got to be flawless. You need a lender that works within your team and provides all the little things that are necessary to get an offer accepted. So huge. And I'm going to talk about some of the things, but if they're not doing that, then find another lender to add to your quiver, right? And you need a lender that can perform, okay? So, but in my opinion, and just I think about all the things that bring you guys value, in my opinion, the number one thing a lender can do to help you succeed and move on to the next transaction is to make your client appear stronger than they are at the offer, okay? There's lots of things a lender can do to help you, but in my opinion, I'm going to explain why this is number one, okay? Here we go. Any questions so far? Comments, concerns? My team, we got 3 priorities. Number 1 is to deliver wow service on every single client that you refer us to, okay? Wow service, making sure your clients are happy, making sure they're completely dialed in. Number 2, making sure that when we pre-approve a client, we hand them back to you, we know that loan is going to close, right? The worst thing that can happen. How many times has this happened to you guys? Or tell me if it has happened to you guys. Client says they're pre-approved, loan officer says they're pre-approved, all of a sudden they go to submit an offer on the loan and their deal dies in escrow because they weren't really pre-approved. Has that ever happened? Anybody? Raise your hands. Nobody? I've saved some of your guys' deals. There we go. It has to be rock solid, okay? Make sure the client is in the absolute best position to be out higher offers and even cash. Okay? That's the ticket. And this is our bulletproof buyer program. There we go. Okay? Drum roll. We're going straight into it. So the bulletproof buyer program, it's a silly name. You guys can call it whatever you want. Just trying to brand this thing to make it stand out and make it something that you guys will remember. But it is a huge, huge value add. Okay? So we're going to go over this thing, but there's 10 bullet points on the Bulletproof Buyer Program, okay? Bullet number 1 is exactly how it sounds. You want your clients to be fully underwritten, pre-approved. And let me step back for a minute. This isn't going to be necessary in every situation, right? And right now when things are slower and maybe not as competitive, especially if you're up in like maybe Riverside County and there's not as much competition, as many offers, maybe you don't need that right now. But hang on to this information so that when we do go into the springtime and it starts getting 5, 6, 7, 8 offers, or maybe even competing as 2 offers, but you're still competing, this is where the value is going to come in. Okay, so fully underwritten pre-approved. We got 3 kinds of pre-approvals now. We got pre-qualifications, which turn and run. If anybody says they're pre-qual, don't do it. They haven't sent in any documents, and they just had a phone call with the bank, and the bank says that, oh, yeah, sounds pretty good. Take them shopping, right? That's a disaster waiting to happen. Pre-approved, at least they sent their documents in. Fully underwritten pre-approved, you literally had it, income, assets, and credit signed off by the underwriter. Okay, this is going to come back and play a big role in just a minute. And that's exactly what we do. When we can, we submit our loans to underwriting, we get everything taken care of, we get all the conditions in. Okay? Second one, bullet number 2, price wins. This is so true. Not in every case, and I'll prove it to you. Price isn't always super important. Cross country, we beat them by a quarter point to 0.375% every single time on every loan, right? We just do. Like they could dip down and try to match us, but we do. They close more loans than anybody else, right? So interest rates are important, but not always important. But for the people that it is important, if you send them to the wrong lender, they give them a high rate, it could turn them off, and they're not even going out shopping, okay? So oftentimes price can win. There's not another platform out there that offers better interest rates than mortgage brokers. It's just the truth. And I'm talking every single day, day in, day out, FHA, USDA, VA, conventional loans, non-QM loans. We will be the best or very near the best every single time, right? And you might get a retail lender. I won't say the name. Sounds like Guaranteed Mate or rhymes with Moss Muntry or whatever. Anyways, they can dip into their branch kitty and they can lower their rates every now and then to match what we're doing, right? They might be doing it for free. They might be doing it for next to nothing, but they're never going to match what we can do day in and day out. That's just how it works, okay? So price wins deals. This is the other one, fully educated borrowers, you guys. An uneducated buyer is a nervous buyer, and buyers don't know what they don't know, okay? We just had a client, Brad and I just had a client where we talked to them about their earnest money deposit, and we went through the education process. What we could have done better is stopped and said, do you understand? Do you have questions? Does this make sense to you? Instead of just going over it like, does that make sense? Yep, okay, cool. You get stuck in your routine, right? But they got to the point where it came time to put their earnest money deposit in, and they're like, whoa, what's this earnest money deposit? Right? And you're like, no, that was in the approval package. Like, went over the approval package again with them, and it's like, it didn't connect, right? And maybe there's some other things going on, we don't know, but they ended up backing out, right? But a fully educated buyer is key, especially with this program, okay? We take care of all the basics, but we have to be a unified team. This is so important, right? I need to be saying the same thing as what Jen is saying, right? I need to be saying the same thing as Bo is saying. And if we're saying opposites, then it's not going to work out. We're not going to have the same effect, okay? Bullet point number 4, no loan contingencies on your offers, okay? Submitting an offer without any loan contingencies. 100% possible. Why do you guys have loan contingencies on your offer? Yep. What else?
It's a user's job.
Okay. Anything else?
They need to sell their home.
Because the underwriter still has to see income, assets, and credit, right? They have to sign all that stuff off, right? Well, if you take care of all that in the pre-approval process, you can submit your offer without a loan contingency, right? You still have your appraisal contingency, possibly. You still have your inspection contingency. How can you get out when the inspection comes back and it has a report and it says something's wrong with the leaky faucet? You can back out at any time due to inspections, right? Okay. So one thing to consider, if you have a fully underwritten pre-approved client first, and you go in with no loan contingency because income, assets, and credit have already been signed off, all the gift letters have been taken care of, all of your VOEs are taken care of, all of that, you can go in with an offer with no loan contingency. It looks pretty strong, okay? So it's a big point. 5-day inspection period. I wouldn't say waive inspections, but you can do a 5-day, right? That's pretty fast. 5 days really fast. In fact, we had a client where she came back, she said, Josh, we can't do it in 5 days. I'm like, why not? She goes, because I can't get the inspector out there and get the report back in 5 days. And my answer to that was, find a different inspector, right? Somebody will do it. And now, am I saying this on every deal? No. But if you know there's competition and that's going to make it happen, even if we got to pay that inspector another couple $100 to get it done, absolutely. Yes, Jen?
Can I go back to point number 4?
Yeah, for sure.
So when we, and just help me, help you, help them.
Mm-hmm.
When we send someone to you to get pre-approved, like, is there not on your end saying, hey, let's just do this whole thing, let's like go big or go home? And that way you call me back and go, guess what? Not only are they pre-approved, but they're fully underwritten.
Yes. So Jen has gotten to the point of my entire presentation a little earlier than I thought. The answer to your question is 100%, and I'm going to tie it all in because it comes back to how we talk to the borrower or to the client and how we encourage them. Because here's the thing. Anytime you give them too much, and you're like, oh, you got to, so you can remove contingencies, you got to do this and that. They're like, dude, what? This guy's 1 on crack, but 2, like that's crazy. I just wanted to get pre-approved, right? So you have to massage the situation. So I'll go a little bit more. Great question though. And yes, getting there in a second. Find another inspector. Here's a great one that is often overlooked, right? Because people don't think about it. But an appraisal waiver, you guys all know what an appraisal waiver is, right? Now, by the way, the rules changed. I think I've sent out some videos on this. If they put 10% down now, it used to be 20, 10% down and the purchase price is under $1 million, there's a possibility you can get an appraisal waiver on Fannie Mae and Freddie Mac conventional loans, right? Not FHA, not VA, but Fannie and Freddie, okay? So we always want to run DU and LP before you submit an offer. Because if you can go in with no appraisal at all, awesome, okay? It just makes it that much more powerful. And the other part is this, is that the buyer has to understand, this is part of the education part and how we're all going to be on the same team. They have to understand that appraisal is not exact science, right? It's not. It's one person's opinion. And that's the point you guys got to drive home. It's their opinion. You could have 10 different appraisers and get 10 different values. That's a fact. And the reason why is because in an appraisal report, there's adjustments. Adjustments for the view, adjustments for the remodel, adjustments for the kitchen cabinets. And some appraisers think that the stone from the early 2000s that was in every single house is still beautiful and incredible. Whereas another appraiser might think that's dated and doesn't, mark up their value for whatever reason. Does that make sense? So an appraisal is one person's opinion. You got to drive that home, especially if we're going to utilize something like this. Okay? Next one. In a conventional loan, to put in 10% down, we talked about that. That's going to be your appraisal waivers. And then obviously, if we're working as a team, realtor pulls the comps, we review the comps with the client just so everyone's on the same page. And we'll make sure that, hey, 95% of the time, appraisals come in right at the purchase price. Do you guys agree? About 95% of the time comes in right at the purchase price? Okay. Now, if the values are shooting up and things are going crazy, different story, right? But right now, I'd say about 95% of the time it's coming in right at the purchase price. Right, which is a big part of the messaging that we give to our clients, okay? Appraisal gap strategy. You guys got to know how this works, okay? If someone's putting 10% down and they really want this house, and it might be a little higher, and maybe it's not even a little higher on your offer, you're just trying to make your offer look better, right? You could do an appraisal gap strategy of 5%. Why 5%? It's not exactly that number, but I'm keeping it easy. The reason is because if it comes in 5% lower, it's still the exact same loan amount. It's still the exact same purchase price. Their mortgage insurance goes up by $50, $60, $70, right? Maybe just $25. So you can do appraisal gap strategies. Come on in, Krista. What's up, guys? How we doing? Good to see you. Did you guys get food? Okay. Sorry. Should I draw more attention to them? They obviously don't want it. How you guys doing? So good to see you. Appraisal gap strategies though. If we know we're in a competitive situation and we know we got to put it up there. If the other offer isn't going to have any type of appraisal gap strategy, even if you don't need it, it still looks good on your offer. It just says that, hey, my buyers want this, right? So you can put an appraisal gap strategy of 5%, 2%, 3%, whatever the difference is between if they're putting 10% down and they're not a first-time home buyer, then 5% down. If they're doing FHA and they're putting 10% down versus 3.5% down, okay? You can utilize that appraisal gap strategy on your offers to make it look stronger. Does that make sense? Kind of sort of? Yeah. So on your offer, you can put an appraisal gap saying, hey, purchase price is $600,000. We will cover, we will buy this house even if appraised at $570,000, right? Because the terms for the client doesn't change. It's the exact same. No extra down payment is necessary. The mortgage insurance might change a little bit, but that's it. But that's part of the education process between loan officer and the realtors to make them understand. Okay? So appraisal gap strategy. And by the way, we're doing all this safely, by the way. We're not sitting here just waving things and not explaining to the client. There's a strategy that goes in. There's a conversation that goes into all this. Okay? If the client doesn't waive the appraisal, then we can do appraisal contingencies in 5 days. We order the appraisal the day the offer is accepted, and we just pay for it on a rush. Okay? So, always possible. Just ask on that client and that transaction how quickly we can do the appraisal. We can absolutely do it in 5 days. I might tell you 7 because I want to feel out what kind of situation this is. Like, we don't need 5 days, guys. Don't do 5 days. But if we need it, we will make it happen. I'll pay the rush myself. And we'll make it happen, okay? Here we go. Bullet number 7, 10-day closings, okay? This isn't always necessary. I get it. But speed can be king in certain situations. If the house is vacant, if the person's got some crazy situation, they got to be out as quickly as possible, or if you're just trying to make your offer look better, put 10 days on there. They might counter you back to 17 days, right? But it's just showing that buyer means business, right? Sellers want a sure thing. That's what they want, right? We've beaten out cash. We've beaten out higher offers with this strategy. So I know it works. This is something new. And this is the first time we're rolling out publicly to everybody. I've told some of you guys this, but we are offering our $500 per day per diem for every day a loan doesn't close on time, okay? That doesn't have to be 10 days. That could be 17 days, 18 days, 21 days. You can put it, we can't put it in the offer. I mean, you can put it in the offer. They can always write it out. We'll see what that listing agent says. But I can provide a contract to the listing agent that says that we will pay them $500 per day for every day that we don't close on time. Okay? And that comes from PGS Home Loans, not the buyers, not the buyer's agent. It comes from us. Okay? So we will add that on there to strengthen the offer. We also have a $10,000 a day closing guarantee. What that means is that if for some reason this loan blows up in underwriting because of something to do with the client's qualifications, right? Maybe his income was calculated wrong. Maybe he didn't have the assets. Maybe something popped up on the credit report that we didn't see. Guarantee $10,000 from PGS to the sellers if we can't close it for some reason that happens in underwriting. Not the appraisal coming in low if we didn't waive the appraisal fee. Not because there's a solar lien on the title that we didn't know about, because something in underwriting. Okay, I've got a whole contract drawn up. We send it over, and you guys can send that with the offer if that's going to be the deal. Okay?
Have you ever had to send it out?
The contract?
Have you had?
Oh, to actually pay the money? No. Nor will we. Okay? Here we go. And number 10, tag team the offer. If you guys aren't doing this, which I think most of us are, this is huge. We want to put our best foot forward every single time. Offer goes out. Obviously, you guys are going to CC us. As soon as we're CC'd, we're emailing right away, raving about the buyer's ability to qualify. You guys as agents, right? It's such a big deal. And then also our ability to close as far as our team, right? And then I will call, it's by 8:30, by the way. I forgot to tell you guys that. Because I'm usually in bed. I like to be in bed by 8:15. If I can be in bed by 7:45, that's really optimal. But 8:30, I'm in bed, okay? So if you want to send offers out at 4:30 in the morning, I will reply. But 8:30 is about the cap, unless Taylor or Crystal can reply, okay? If you guys can send us a listing agent's contact information, that's awesome. Most of the time, it's not on the purchase agreement. They always seem to leave the phone number off. We'll just do a simple Google search. We'll find them. We will call them and leave a voicemail if they don't pick up, which usually they don't pick up, and we'll shoot them a text. And then what we started doing is doing videos to anybody that we left a voicemail for. And in that video, it's just repeating what's in the email, just raving about the client, that they've gone through our underwriting process, that we can close, that, Mike and Jen are amazing, and Jesse's unbelievable, and Brad's incredible. Like, clients are, blah, 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 right? We're just raving about it, trying to put our best foot forward. That's the tag team, right? It's super, super, super important. And by the way, I can't tell you guys how many times we've called an agent and there's like, it's so nice that you called us and we're not trying to track you down, right? So these are little things that we are doing. And I don't think it's a little thing. I think you combine all these, it's really a huge deal, okay? So real quick, fully underwritten pre-approved clients, pricing that wins, fully educated clients, no loan contingencies, 5-day inspection period, waive the appraisals, 10-day closings, $500 per day per diem, $10,000 closing guarantee, and tag team that listing agent. Boom. So we can try to get that offer accepted. Okay? So let's take a look. Let's compare offers. Put your listing hats on right now. You guys are all listing hats. You're all listing agents. A regular offer comes in. It came in at list price. Pretty cool. This offer comes in, list price, fully underwritten pre-approval, 10-day close, no loan contingency, appraisal gap insurance, 10K guarantee, $500 per day per diem. It adds up, right? And maybe you don't need every single one, but take 3 of them. Take 5 of them. Take 2, right? Anything's better than just putting list price, because if you're doing list price, what are you really doing? Especially in a competitive situation. You're putting a client in a position where they better offer the highest, or they're never getting their offer accepted, right? Here we go. Josh, it's too aggressive. We can't do that. You make me feel icky inside, right? I can't advise my clients to do this. Well, let's talk about it. Imagine yourself going property after property, offer after offer, nothing's getting accepted, right? And I get it. Trust me, I talk to you guys all the time, and I know what's going on. I see the process. Who is it not good for? It's not good for you. Why? Because you're away from your family and friends. You guys love to be hanging out with your people and not showing the client 38 properties. Who called me and they showed him 38 properties? I think it was Ashley Recibo.
Oh, Ashley,
Yeah, she's grinding so hard right now. There's like 38 properties. I was like, dang, Ashley, that's amazing. 38 properties, that's so much. Away from your friends and families. Not doing what you love. Spending crazy money on gas. It ain't cheap. Who's got an e-car? What are they called? Who's got a battery car? Yes, smart move. Those things, gas is expensive. Holy cow. Wear and tear on your body, wear and tear on your car, wear and tear on relationships. That's gnarly, right? And then offer after offer, not getting accepted. How many people think sometimes it's them? Like, what am I doing wrong? I feel it all the time. I'm like, dude, what am I doing wrong? What is going on here? Why are we not winning this thing, right? And you make less money. Why are you making less money? Because the more time you spend with that client, the less time you can spend with the next client that's going to be making you your next commission check, right? So we don't like to be pushy and salesy, but if you know what you're doing is right and you care about that person, it's your responsibility to tell them, right? Just got to change your thinking. Now, why is it no good for the clients? They start off excited. I get the conversations like, oh, pre-approved, let's go. Brad, you ready to show us properties for 9 hours on Saturday? Let's go. Stoked. There we go. They go through the education process. And by this, I mean they put in 3, 4, 5 offers. And they're feeling out the market. They're realizing they can't lowball the property by 50 grand. They can't get that one. So then the next one's a little higher, a little higher, a little higher still, right? They lose out on 3 or 4 homes. What starts happening? They get a little buyer fatigue. Buyer fatigue is real. It is real. I mean, how many times do they want to come out there looking at homes that they're not super pumped on, right? And then they take a break. Or they decide not to buy. I want to rent because that's a good idea, right? Or worse, they find a different lender. Or I'm sorry, yeah, that's horrible actually. They find a different realtor, right? That's the ultimate worst. They find a different realtor. So when we say that it's too aggressive, is it really? My clicker's fast. Okay, and there's reasons why there's agents out there that'll have 25 clients and they'll close 20 of them. And there's reasons why there's agents out there that have 25 clients, they'll close 2. Okay? I guarantee it's the conversations they're having. Guaranteed. Right? So, top agents, they present their value. They articulate their value. And they're not scared to tell their clients about what they need to do. Right? Quick story for you guys. I remember I first started at Chase Bank. And I've already got a high-pitched voice as it is, right? So picture me at like 23, and I'm talking to these people, they're adults, right? And I'm like, you should get a 30-year fixed-rate loan, blah, blah, blah. High voice, and they would always say, how old are you? And I was like, oh. And I was like, I just can't wait to be in this business for 5 years so I can just be a professional, right? That was my idea. Now 25 years, I still have a high-pitched voice, and they don't ask me that anymore. But anyways, you got to know how to articulate your value and not be scared to tell the clients, right? And number 2 is that you got to be an advisor, right? Not an order taker. Everybody knows this. I'm not telling you anything new, but it's a great reminder. You got to be able to tell your clients what they got to do. Sometimes it's subtle, and sometimes you just got to be like, boom, this is it. We've seen 47 homes. Like, something's got to change. If we don't do something different, we're going to have the exact same results, right? Cool. The Bulletproof Buyer Program, it's a huge, whatever you guys want to call it, it doesn't matter to me. We'll call it the Bulletproof Buyer Program. It's the best name I can think of. It really is a huge value, okay? Your buyer stands out on the offers. You guys saw the offers side by side. It's a big deal. Your clients will know that you're doing everything possible. Like, what else can you do as an agent? When you're doing all of these things, you're submitting an offer. That's providing value in an offer, right? And the more value you can give, the more money you're going to make, right? Or how about this? The more lives you're going to affect, right? In a positive way. Change your messaging. Very simple to apply this to your business, okay? Well, like I just said, we can keep doing what we're doing and hope for a different result. That's message number 1. Most clients would understand that, right? Or the current path you're on means that you have to be the highest offer. Or the next person that you're going to beat out is just such a shaky offer. More than likely, you're going to have to be the highest. So buckle up and get ready to go higher than everybody else, because all we're doing is submitting standard offers, right? Or how about this one? The rate they have with their current lender is like 1/8 of a point lower than what maybe we could do. But that other lender won't do any of these things, and they're clinging on to this rate. And it's like, well, that rate might be slightly better. It might be saving you $72 a month. But if you ain't getting that offer accepted, what does it matter, right? Having those conversations, it's important. The longer you look, the more likely you will to tire out and not buy. Is that a true statement?
Yeah.
It is. So might as well say it. Get it out there, right? Change the course. Here we go. Oops, the script. Now, here's where the communication comes in, okay? And we put a script in there. I'm going to be honest with you guys. Megan ChatGPT'd it. I wrote something out, and then she put ChatGPT. It came out way better than what I was writing. I was like, oh, go with that one. That's pretty good. I'm not going to lie. But here's where I'm answering Jen's question, right? In order to submit a file to our underwriter, we have to pull a hard pull credit report, okay? You can't do it with a soft pull. The underwriters won't look at it. Why? Because it looks like it's a borrower who's not committed. And an underwriting staff, when you think of a company, they're trying to be as efficient as possible, and they're not going to waste their time on a soft pull because it doesn't tell them that the person's more worried about their 2 to 5 points on their credit score than being approved, right? So the first thing you guys got to know about communicating this value is you got to know about credit. And here's the facts on credit. When I pull your credit score, we're registered as a mortgage entity within the credit bureaus and the credit reporting agencies, right? It takes 2 to 5 points off their score, okay? That 2 to 5 points comes off their score for 60 days, and then it goes right back on their score. So it's a temporary loss. Now, additionally to that, Credit scores will swing 20, 30 points in any given month based on credit card purchases, paying off balances, taking out a new credit card, whatever, okay? So 2 to 5 points off their score. And remember, if you're at a 8, 10 credit score, you should never be worried about pulling your credit. You shouldn't. Because if you go from an 810 to an 808, you're going to be okay, right? If you go from a 784 to a 782, you're going to be all right, okay? So we got to be able to talk and say, hey, did you do a hard pull or a soft pull? We did a soft pull. Oh, okay. Okay, cool, you did a soft pull. Okay, well, if you do a hard pull, whatever, like that's where we come in, because if I say it, I sound like the D-bag salesy loan officer who's just trying to pull their hard pull credit report, right? But if we say it together as a team, and then we share with them all of the value, once we get that hard pull credit report, it's a huge difference. We can't even run DU or LP, our AUS, our automated underwriting system. We can't do it with the soft pull, right? So a client's putting in offers and they're putting 20% down, and we can't even tell you guys if they have an appraisal waiver. What a bummer that is. At least get an appraisal waiver. Make your offer look stronger. So the number one thing I'd encourage you guys to do is, if you like this program and you think it's going to be valuable, and I know it's not every client, I get it, right? But if it's a client in this competitive situation, time and time again, support us. We're going to be asking them to pull the hard pull credit report, because we want to run this through underwriting. We want to get everything signed off. We want to have that AUS. We want to have everything ready to go so that you guys can take your pick of all these 10 bullet points to try to make that offer look as strong as possible, right? So that is the messaging. And then also conveying the message about how powerful this can be, which I think goes back to right here. The current path you're on means you have to outbid everybody else. And again, I know this isn't right now. Maybe this isn't the market right now, and there's still plenty of competition right now. But when it starts heating up and there's 8, 9, 10 offers, 15 offers, and they're going to go in at list price and just be at list price, dude, you're wasting your time at the keyboard. I understand you got to do it. I get it. But let's try a different path, right? So there's a script in there. Read it. It's pretty good. But obviously, it's just the messaging that we're trying to get across. Bulletproof buyer process. You guys, this is it. This is all it takes. Application, we do it by Zoom or phone call, or we'll send them a link, which we don't like to send people links, by the way. We prefer Zoom. Zoom's the best because you get the face-to-face and they actually feel who you are. Phone call second. We request the documents. You guys have all seen these emails. We're requesting documents all the time. The reason why documents are so important is because we want to get that fully pre-approved clients. It's annoying for clients to get the documents, but I'd much rather have them be annoyed in the pre-approval process than in the underwriting process when everything's live and you guys are getting your inspections and your appraisals and you guys are asking for everything. Let's get the hard work out of the way. You guys can also relay that message too. Get them everything, okay? We do our pre-approval, which is standard. We'll usually do it same day, right guys? Usually same day, next day at the very latest. And then we submit it directly to our underwriting department after we have the hard pull credit report. It's like 2 days, but I'm going to tell you guys 3 to 4 days for that underwritten approval to come in. Once that underwritten approval comes in, we review everything. We'll send the needs out again, just collect everything else as well, but at least we'll do the approval package review everything with them so that you guys can get out there, submit offers, and choose any one of those bullet points or all of the bullet points when submitting an offer. Okay? Any questions on that? Questions, comments? Yes, Daniel.
So since I want to set us up for success, I bring a brand new client face to face with you, sitting down at your office, our office, whatever. From that point of meeting a brand new human that is excited and will give everything that we need.
Yeah.
How long does it take you to get that fully pre-approved so we can move forward?
Yep. Great question. If the client isn't the issue, then we can have it done in 4 days for the fully pre-approved one. So if we meet them on Monday, we can let them know, hey, get everything done by the weekend. We have everything. 100%. They'll be out submitting offers with every single bullet point on here by that Friday, Saturday, Sunday. Beautiful. Absolutely.
Do you have an underwriter in-house or somebody else?
Nope, but we have 82 different lenders, and we have a good dozen or so lenders that are open to what's called a TBD approval, to be determined, meaning there's not an address on there. And you just submit that thing just like you would any other loan, and we run it through there, and then boom, 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 they spit out the approval, gives us conditions list, everything just like you would on any approval. Okay, and then once you guys have that, appraisal, inspections, title, what else? Insurance, yeah, little things like that. Okay, well, that's a great point. I'm glad we said this. If we know we're out in the boonies, right? It's not even the boonies anymore. If we know it's going to be a fire hazard, then if it's California Fair Plan, that's the other thing that we'll do. We've got 2 different insurance brokers. We can ask them for insurance quotes on the offer. Or even you guys should think about making an offer, which I think we just did 2 days ago for someone in here. Maybe not. We'll get that insurance quote and find out if a California Fair Plan is necessary or if they can do it with just a normal insurance policy. Okay, so use us for that because that can save you a ton of time. If it's a California Fair Plan, guys, sorry, all bets are off. We can do as many bullet points as we want, but we're not going to do that loan contingency because we have to make sure that insurance policy comes in, that California Fair Plan. Yes, Jen?
Will they require the full name and date of birth of the client?
Yes, which we have. Yeah, because we have the application. Oh, I see, but like if it's like we don't have it in yet, yes. So, in fact, we just did one yesterday. I had to give them the name and date of birth. Questions, comments, concerns? Yes, Joel?
Are they still having to do VOE like days before closing?
They do. They'll do the verbal VOE right before. So, actually, part of that approval process is making sure that we've got the correct contact information. And there's only so much we can do. We'll ask for the correct contact information, and they're like, well, Debbie should have picked up the phone. I don't know why she's not picking up the phone. And we'll just hustle to make it happen. That definitely won't delay something.
So back to that 10,000 payout.
Yeah.
If VOE comes out negative, what's the result after that?
So if we require a VOE, then we will do it beforehand. Part of our fully underwritten pre-approval process is we get the VOEs first. If you're talking about the verbal VOE at the very end of the loan process, where they have to make sure they still have a job, well then I'm on the hook for it. Because if they quit their job, I'm so sorry. In the contract, it says if borrower quits his job during the if borrower is fired or quit, then we're relinquished of our $10,000. There's a lot of bullet points in there. My attorney Jack Friedel reviewed my If they get a cold, then that's where we're at. No, I'm just kidding. Just kidding.
And that 10,000 goes to the seller?
The seller, yeah. And we just don't pay Riley and Taylor for a while, so it's really not that big of a deal. Not that big of a deal. If you got,
At that point, they would be losing their deposit too.
yeah. So they better be rock solid, right? Right. So but remember, your inspections are there. It depends on if you do a 5-day inspection or not. Like you can still get out. And remember, you guys, you don't have to do every bullet point, right? You don't have to do every one. If we're fully pre-approved, unwritten pre-approved, then let's do the $500 to $10,000 and maybe an appraisal gap strategy, right? I'm willing to put my money on this thing if you give us the time to get them fully pre-approved, right? Because we're so confident in our work. We haven't had a normal pre-approval not go through. I think we had 1 or maybe 2 in the last 6 years since we've been with the brand. So, and on the $500 per day, if it means we get a deal and I got to pay $1,000 because we're 2 days over, okay, we still got a deal. I just won't pay Riley. Riley is broke because of this program. No, just kidding. But that is it, you guys. That is the Bulletproof Buyer Program. I hope that's helpful. Any questions, comments, anything I can do to help out? Was the food good? Yes. Awesome. Was the information good? Yes. Valuable? Would you guys, real question, could you see yourself using this? Could you really? Yeah. Promise? All right, cool. Because I know, let's think of the lenders that don't do it. Zillow doesn't do it. Rocket doesn't do it. Most other lenders don't do it either. So if you guys need that value to get them in there, and I understand it's not on every property, but when you're ready to go, we're ready to go. So thank you all for coming. Appreciate your time. Thank you.